Okay, welcome back. You're listening to another daily editorial on the Korelin Economics Report. Got myself, Cory Fleck, Steve Taylor, and Rick Ackerman on the line with me right now. We're going to respond directly to a comment, actually an email that I received from a listener, I guess former listener, and I'm sorry to hear that, by the name of Mike. Mike is a contributor to Seeking Alpha. Seems like a very, very interesting individual, for lack of better terms. That we had a bit of I guess I'd have to say an emotional situation between Jerry and Bird and Mike. And I guess the only thing I could say about that is remember, guys, and I'm addressing this to Jerry and Bird, I guess, there's really no point in getting emotional in this world. We're all in this thing together and we're all trying to figure out what's going on. So I get angry when people call me names, so what can I say? Anyhow, having said that, Mike, you brought up something really interesting that I felt was interesting. I did a fair amount of research on it in addition to my knowledge of the subject prior to doing the studying last night, and had to do with is or is not the market in a bubble. And by that I mean the conventional market. And I grant you that a lot of people, including Big Al and his wife Kathy, have made some money in the conventional markets. In my case, probably over the last 4 or 5 years. I believe that it's semantics here. Do people think the market's in a bubble, or do people think that the market is fundamentally very, very strong? I personally don't think the market is fundamentally strong because I think the bulls are bulls simply because of all the quantitative easing that's going on. I would suggest that if the quantitative easing stops, that we're going to have another very, very scary situation in the conventional markets. And that's why I define the conventional markets as being in a bubble. I think that the bubble is being inflated by quantitative easing, for lack of better terms. Steve, let's get over to you. What do you think, man? You've been in this business a long, long time. I mean, do you agree with me? Disagree with me? Do you agree with Mike? What do you think?
Al, I generally agree with you on this one. As you say, what's the definition of bubble? I tend to think that maybe balloon might be better definition, pure definition, because what we're talking about is artificially pumping up something with air. If you withdraw it, it's going to deflate. It might not pop or explode or fall apart completely, but definitely deflate. And that's what we're seeing here. Every time someone in the federal government talks about withdrawing support and they're going to cut back, the market tanks. And it's because everyone is afraid that once they stop, that the market is going to decline. And fundamentally, yes, things are improving, but they're probably not improving as much as the market seems to fundamentally or quantitatively say that it should be. That is, growth. There is growth, but the market is factoring in the growth is bigger than it actually is. And so on that point, I think that the market's definitely going to decline, that there is a problem here. I don't expect it to crash. If it did, I wouldn't have any money in the market, and of course I do. But I'm not necessarily putting more money in the market because I'm afraid that it is overpriced and it is going to decline. And perhaps at that point, it might be worth putting money back into the market.
Corey, how about you?
Well, my whole thought on what's going on in the market is the whole fact behind the Fed injecting this money into it. Quite frankly, when you have an investor, as I'll call them right now, which is the Fed, putting this much money into the market, it provides a fantastic base. You know that it's not going to absolutely collapse. And after listening to Yellen's Q&A, you know that she's not going to let that happen. The Fed has become way too active in the daily market ups and downs, and we all know how concerned the Fed is with this. So I think that we definitely have a bubble happening here, but I don't think it's going to fall or collapse soon just because the Fed is determined to keep it going. And when you're able to print really unlimited amounts of money, then you hold a huge trump card over anybody who is trying to run this market down. And on another note, some of the facts and some of the stats that we've been seeing is that the economy is slowly growing. Whether you believe them or not, it's leading to a better perception coming from investors on the market, which Investors' perception goes a long way in contributing to these increase in bubbles. But I was reading one article that said, you know what, let's not get all too excited about this growing economy, which is a slow growing economy, because when this Affordable Care Act comes in, it's going to handcuff a lot of the retail and, let's say, normal outside investors. So it's going to be left up to the banks and the Fed, which scares me in the fact because I don't think these guys are going to let it collapse, at least in a hurry. So I guess to sum it all up, I think that we are in a bubble stage, but I don't think we're close to popping.
Mr. Ackerman, you deal with this every day on your website. You got a ton of people listening to you. You interact with hundreds of thousands. Well, I don't know if it's hundreds of thousands, but you certainly agree with thousands of people. What do you think about all of this?
I think we're definitely in a bubble, but the paradox is one thing that this ever rising stock market has proved is that the stock market and the economy are in no way connected. In the anecdotes that we hear in our daily lives, we see that most of the people we know with businesses are swimming as hard as they can, they're paddling upstream, really. If you go back to Henry Ford, who said that you've got to pay your workers if you want them to buy your automobiles, the economy has been in a situation where the workers are not getting paid. And even though these company revenues have gone up, they've gotten lean and mean, you might say, eventually it has to come to no good because the workers aren't getting paid. So the movement up and up and up of the stock market, it's a paradox, but you can see where it's unsustainable over the long run. As a practical matter, I straddle the bet. I'm always looking to get short at promising rally tops based on targets that I have that are technically derived. But right now, we're playing puts in the diamonds, but we've got a corresponding long position in Netflix. So I'm simply straddling the bet. I thought that the deal breaker would be Obamacare. All things considered, with the Fed money flowing, it's only flowed into the financial system, which has taken a small part of it and deployed it in stocks. And that was the intention of the Fed, to essentially inflate stock and real estate prices. I think the real estate price part of it is already in a state of incipient collapse. And I think the huge new taxes on the middle class represented by Obamacare are enough to, that will be the straw that breaks the camel's back. That's, to me, is a good reason to end the bull market. And that's why I guess my bias is bearish right now.
Rick, you brought up a great point there, is that the markets and the economy, there's been this growing disconnect because, as you said, we can walk along the streets, and I know even here in Vancouver, you can talk to a lot of people, and it's tough to find a job right now, but yet the markets are still reaching all-time highs. So I think this is almost a new point, at least from what I've seen, where there has been this big of a disconnect. And I guess I ask you or Al, this question is, will we start to see these come more in line, or is this just a new time that we're in?
I think we're kind of in a new time right now. I don't mean to jump over your head there, Rick, but I think we're in a new time right now. And the reason I say that is because I'm firmly convinced that the only thing at this moment that is keeping America afloat is the quantitative easing by the government. I think that if we didn't have the quantitative easing by the government, I think that we would be in more than just a little bit of a bad situation. And consequently, when I said to you, Mike, if you're listening, and I don't know if you are or not, I hope you are, but is that there's obviously truth to both sides of the argument. Is this a bubble or is this not a bubble? But the reason that I think that it's a bubble is because of what Cory just said. We got a huge disconnect here between, at least from what I can see, between economic reality and the stock market. Is that a bad thing? Not necessarily. There's money to be made, but ultimately, unless, in my opinion, an absolute miracle occurs, unless we can grow our way out of this thing, and the government is betting that we can, and the government is betting that, by putting this 85 billion or trillion or quadrillion dollars, whatever, in the market every month, that we'll grow our way out of it. Well, that may very well be the only solution to saving us, other than just basically not remodeling the house as they're trying to do, but tearing it down and rebuilding again. Rick, let's give you the final word on this.
The Fed has lost its bet. We're not growing. And the reason you can't extrapolate out further efforts into some success is because it's taking more and more dollars of credit to produce a marginal dollar's worth of growth of GDP. You know, we used to get more than a dollar's growth for something like 50 or 60 cents of new debt brought into the system. But it's taking now, the numbers are off the charts. You know, I wrote on this for Barron's years ago, and it was taking about $250 in new debt to grow the economy by a dollar. But when it went above something like $9 of new debt to achieve a dollar's growth, I stopped keeping track. So it really is a losing bet, and it's taking more and more easing. It's pushing on a string at this point because there's no one who wants to borrow that money. There's only financial institutions who shoot it into the bond markets and the stock markets. So to me, the game's over.
The game is very possibly over. Again, we listen to everybody. We don't necessarily just take singular opinions on this particular program. Mike, notice nobody's called anybody names here. Nobody's done much of anything other than state our opinion. Jerry, I got to say, rather than calling people names, you know what I do? Feed them to the gators, man.